Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, June the 28th, 2013. And we're also closing out the month. I'm recording this on July the 1st, 2013. So happy Canada Day weekend, first off. Happy Canada Day weekend to all the Canadians out there. Hope you're having a great holiday. I just ran into the office in the morning here to record this video. I'll be heading out to spend some some quality time with the family. So let's start off as we usually do with the Dow futures on the daily chart. I use for those who have been watching my video, they know that I use the Dow futures as a proxy for the stock indices. So essentially, what happened this week in the market with the stock indices, anyways, is that we have this fairly clear level. It's more of a zone, but I'm using the level of 14,800 as the major support in the Dow futures. And essentially what we had was, let me just change this to red. What we had was a break of 14,800 last week, and it looked like we were going to sell off. We have this minor down channel going, and we sold off to the bottom of that channel. We sold off, down to 14,000. Well, let's just mark that level actually. Let me just grab a line. We sold off to around 14,480, somewhere around that level, 14,480. And then we found some support. Excuse me. We found some support and we came back up into resistance. And it looked like this area here, anywhere between 14,800, the retest back up to, wherever this trend line came down. We came up around about 15,000. Anywhere from, this 200-point range looked like it was going to be resistance between 14,800 and 15,000. But now what's happening is, and then we sold off back down into 14,800. But what you can see happen here was when we sold back down into it, I actually, on an intraday basis, I actually took a long trade off of 14,800 on an intraday basis, just looking for, I was essentially just looking for a bounce off of the first test or the first retest of that support level on that day. So essentially what ended up happening was, it was a successful trade. I closed it out way too early, but what ended up happening was we really ripped back up to the upside, over 100 points. I think it was about 129 points, which represents about $650 per contract in the Dow futures. So I missed the majority of that move. I wasn't looking for that much. But having said that, at the end of the day, on Friday, we came right back down into 14,800, and we closed right around that level. So that was sort of the line in the sand, and we closed right at 14,800. But what you can see today is it looks like we put in a minor higher low. So this sort of structure, which is like what I wanted to see was, first of all, let me change the color of the pen. What I wanted to see here for downside movement was we broke here, come up to either this level or this level, and then sell back off and put in a lower high. So I'm looking for the structure of a lower high and a lower low. So that would be the case for the bear side of the market, with the failure of this trend line here and the failure of 14,800. So that's one scenario. The other scenario, which seems to be playing out, we need to see how we close the next day or two. But essentially we came back up, and it looks like we held 14,800, and we're pushing back up above that trend line and possibly set to retest this trend line, which would bring us somewhere around 15,000 to 15,200. But what I'm more interested in is the actual structure, the structure of the market, because if you look at this, we came up, we came down, we found support, and now today what it looks like is happening is it looks like we found support, and now we're pushing higher, and we're retesting these highs over the last couple of days, and we could be set to break through there. So instead of looking for this sort of structure where it's doing this, it seems to be doing this sort of structure where it may be doing this. So if this sort of structure plays out and we come back up, then, you know, this would put me back on the bullish side. But having said that, we really need to clear these levels. Let me just clear this off. We really need to clear this trend line in order to get anything going, you know, to the high side. So, you know, we could do, you know, this sort of a structure and then fail. I mean, really, until we break back above this high or above these highs, we're really not back in full, you know, full bull mode. So this is a tricky area to trade, and I don't think unless we come back down through, let's say 14,800, and we break that hard, I might be interested in looking at some short side movement, you know, with a break of this low as well, and looking for a deeper pullback, which I talked about in previous videos. That's really where I'd like to see the market go, because I really believe that we need some sort of a flush in order to get back on the long side of the market. I'm not really interested in, you know, buying a breakout of these highs, even though that could precipitate a pretty good move. But this whole area in here, this whole box, to me, from a swing trading basis, is just really difficult to trade. So what I'd be looking at is just doing intraday trades in this zone, and then I'd be looking at, you know, a break of the. I treat this like a box, and I treat this like a dead zone, and I'd be looking for really the safe trades are probably a break outside of that range. But having said that, it is a really big range of you know, 7, almost 750 points. So I mean, that's all I have for what it's worth. I don't really like trying to pick swing trades, you know, in these zones that are not really clean zones. They're really just congestion and consolidation areas. So to me, the easiest trade would be a retest of this trend line, come back down through this level and break it, and looking for, you know, downside movement down into, you know, the 50% retracement or the 61.8% retracement, which would be down here somewhere, and looking for fresh long trades off of those levels once we find strength. That's essentially what I'd be looking for. So I hope that makes sense. The analysis hasn't really changed that much over the last video or two. The only real difference is that it looks like we might be putting in some sort of a structural change there. So I'm just keeping my eye on that. So let's take a look at the sister indices and see if you know, anything looks different here. Here's the S&P futures. Essentially looks the same. You know, we're coming back up to retest sort of these this sort of trend line there. And let's take a look at the NASDAQ at NQ. And the NASDAQ sort of looks the same as well. I can just readjust this trend line. That seems to be excuse me, that seems to be the trend line in play. And we have a little bit of upside movement into there, but excuse me. Okay, I apologize. I just had to pause the video there to clear my throat. So there's the NASDAQ. Let's look at the transports. The okay, I typed in the wrong symbol. TRAN. So the transports look exactly the same. And I promise you, I'm not going through puberty here. I'm just having problems clearing my throat, so I apologize for that. And I'm having some strange voice changes here. So let me just zoom in here a little bit, and you can see the transports are coming into trend line resistance as well. And you can see here, if you make a parallel, you can see a sort of a minor down channel forming. So the continuation move would really be, you know, of this channel would really be finding resistance somewhere around 62.91 in the top of this trend line, and then looking for it to put in a lower leg down. So at this point in time, momentum indicators are higher. We're set to put in an M-type pattern on the high side here, which could, you know, lead once it locks in, could lead to some sell-off. This is something I learned from Rob Hoffman. This is something he uses quite a bit, where, you know, the market will come into, now this is a buy side market. He likes to use those in sell side markets, but in terms of where this indicator is still net long bias, is still net positive. But For example, if this was, if this was red coming into resistance with this sort of pattern and it locking in at the end of the day, the expectation, as per his methodology, would be looking for some sell side continuation off of that resistance level. But having said that, we're still in a net buy side market coming into resistance and looking to see if we're going to continue this structure lower or not. So the analysis is the same on all of these instruments. Let's jump over and take a look at some key currencies. Let's look at the dollar index. So the dollar index has been fairly strong off of this this intermediate low, and it is above 82.50, which to me is really like, this zone is really sort of the line in the sand between long and short. From a bias perspective, we're back up above there, but we're going to have challenge points with that trend line coming up around 83.75-ish. So somewhere in that area, we're going to have some challenge points. So if we look at the euro, conversely on the euro is, surprise, surprise, testing $1. It's just above $1.30 support. So these markets to me look like they're just flip-flopping back and forth, where one is strong, one is weak, and it looks like you're going to get a trend developing on one. But what you're really doing is just you're just going up and down through this central magnet of support and resistance. So at this point in time, consider these markets essentially sideways from my perspective, in my opinion. And I would only be looking to, like if you look here, you've got to move off $1.30, which is a good move. It's 330-ish, 340, let's say, ticks, which would equate to about 340 pips in the Forex market. But then you're right back down into support. So the trends they're short-term intermediate trends around this central kind of pivot point, if you want to consider it that way. So at this point in time, I'm not looking for any real breakthroughs in these trends. I'm just looking at seeing if we can pull away and then have a short-term trend develop. So until we actually clearly break some of these levels, I think we're just really in flip-flop mode, and these are kind of hard to trade. They're nice to trade intraday, but from a swing trading basis, they're really, really difficult to trade. So let me I just want to look at the USD versus the CAD, since it's Canada Day, and I was looking specifically at this wedge pattern in the breakout. It looked like we were going to fail that breakout, but I had targets of $1.05, and I have targets of ultimately $1.76. So we came up and we pegged this level of $1.05. We pulled back down, and now it looks like we're just struggling with that resistance level there at $1.05. And I'd be looking to see if we can, find some strength up to potentially $1.76. So that's sort of the high side trade that I'm looking for based on the measure rules of this pattern. So the measure rules of this pattern, I looked at the range, the height of the range from this high to this low. That gave me the $1.05 target, and I looked at the high of this area here from this low to that high, projected it off the breakout, and that gave me this target up here. So I think these targets are both in play. This one has been met, and I think this is a potential. Having said that, the market can do anything, but I'm not actually trading this. I'm actually looking at this for other reasons in terms of managing some currencies, not in the Forex market, but just having to convert funds at different times. So if that makes sense, but not really for trading purposes, at least not active trading purposes. So I'm not in this trade, but I've been watching it, and that's been my expectation. So let's jump over to let's look at the gold. So the gold futures have been very, very weak. And I apologize, these charts are really messy, but let me zoom in to clean them up a little bit. So if you look at this chart here, we've just been lower, lower, lower. I was out of the long trades up and around this area. excuse me, some winners, some losers, and I haven't been participating in this downside movement, but what I am cognizant of, these fib levels here are long-term fib levels going back. If I zoom out this trend, and it might get a little bit squashed, but if I zoom out this trend, you can see the fibs are coming in, long-term from the kickoff back in, 2005. So these were fibs that were initially done on a weekly chart. And if you look at, there's been contract rollover, and, so the charts get a little bit funny. But if you look at where we were back in 2005, and we kicked off and we went all the way up in 2011 to these highs around almost $2,000 an ounce, let's say. So we've come all the way down. We've retraced 50% of that move. Now, if you look at short-term charts, this happens all the time. So this pattern plays out on 1-minute charts all the way up to, weekly and monthly charts. So what I'm looking at now is the possibility that this move, we've come down to the 50% retracement of this huge, move from 2005 all the way up to 2011 highs. And at this point in time, I'm looking at the 618 to see if we can come down and test the 618. I'll be looking to see if we can get some support off of there. But I mean, the major support levels in, to my thinking, are 1,098. Let's call it 1,100, and $1,000 an ounce. So $1,000 an ounce. This zone would really put us at some, some structural support levels going back over time. You can see in the background these peaks that we had trouble breaking through. Resistance became support. That'll be the first test of these support levels in multiple years. So I would expect these levels to be fairly strong support at this point in time. We're still in a sell side market in the gold as far as my indicators are concerned, and as far as the market structure and the trend. But these are some of the levels that I'm looking. I think these are going to be the key levels in the gold futures, $1,000 to $1,100 per ounce. And I'll be looking to see if we can find some support off those levels, and possibly, taking a long in the GLD as a result if we get down into those levels. But not just if we hit those levels. We need to really get down into some of these levels here, and then we need to find some support and put in some structural, some structural changes to the high side in order to establish a proper, risk reward. And I don't want to catch a falling knife. I want to, I want it to start, pushing back to the high side, and look for some sort of continuation back to the high side. I hope that makes sense. I'll try to cover that in future videos going forward, when and if it actually transpires. But just a heads up. So let's look at silver. Silver, same sort of story. We broke $20 and we're below $20. And excuse me, I haven't drawn the fibs on here, but I'm sure the fibs look fairly similar, that we're coming into, the 50% retracement and the 61.8% retracements. I haven't actually drawn that, but I'm pretty sure they're sort of tracking each other. So don't take my word for it. Use that as an exercise in drawing your own fibs and seeing, how that looks. So let's take a look at copper. Copper is actually a little bit stronger, and it had a really, really good push off of this support level. Let me just zoom back in. So you had this sort of double bottom, and then we came back down into it. It looks like we put in sort of a triple bottom here. We found some support, and we're pushing back. Momentum indicators are pushing back to the high side. You can see we actually had a technical divergence here. If you look at the price action, put in a lower low right there, and then the trending indicators actually put in a minor higher low. So that is that's a pretty nice divergence, and I'm starting to wonder now if copper is a leading indicator of gold and silver, if this might actually be sort of an indication that we're really bottoming in the metals. So I don't know at this point in time, but to me these technical divergences are usually pretty good indications of in terms of a heads up. They should get you thinking, they should get you watching and being cautious. If, let's say, you're short the metals, you should be very cautious and tightening up stops at this point in time, not giving anything back, and then looking for potential reversals, because this is, these kind of divergences are pretty powerful signals. Not signals in themselves, but they're powerful heads up. So you really need to see the market action, the price action speak for itself once you see, these sort of signals set up. So we're back up into resistance at the 21 EMA in the copper, and we could come all the way back up to test, this downtrend line. If we break the high of that trend line, that to me would be, a no-brainer that, the copper is bottomed and it's going higher. So I don't really see any indications of, strong volume coming in at this bottom. We did come into a strong volume area, back in these double bottom lows. We broke support and now we're coming back up above it. So to me, that is pretty telling. I'm going to be keeping my eye on that. And I'm just going to flip back to the gold futures and see. You can see here, off of this 50%, we're in this zone of 50 to 618, and you can see here the momentum indicators look like they're starting to roll back to the high side. So I'll be keeping an eye on that. I mean, these aren't hard levels. We could this could be the zone where we find support and then we reverse, or we could come back. I'm more interested in these levels because these represent, these are closer to where I think the rubber meets the road in terms of support in the gold, where the major support is, so that it's easier to establish risk. You don't want to see an early stage reversal and then it says, oh, we're just going to flush down to these levels, and then you get stopped out and then it pushes higher. So I'd rather see it just flush down to these levels. But having said that, recognize that, these could be areas of, final support in at least in the short term. So I hope that makes sense. Let's take a look at natural gas. So you can see we were talking about this level of $3.70, and one of our active traders in our trading room here is he actively trades the natural gas on an intraday basis. So I get the opportunity to to listen and see his thoughts on an almost daily basis. So I was talking about this $3.70 level, and he was talking about some changes in the market where Obama is trying to support some green initiatives, and that natural gas as a result. When I say green, I think it's really solar and some of those other kind of initiatives. And so with those green initiatives, there was a possibility that natural gas might get whacked. So I was looking at that $3.70 level. And, and our trading room member was looking at, the market going lower. So the market followed through with his expectation. And once I saw here that it broke $3.70, I think I mentioned in a previous video that if we break this $3.70 level, then I'd essentially be looking for a retest of some of these lows. So his expectation played out. One of my scenarios played out. I mean, it's hard for them not to. I look at different scenarios, and one of them essentially is going to play out. So, and that's how I look at the market, right? If this, then that. So that sort of played out. We broke the $3.70 level. His expectation played out. And now my expectation, based on my scenario of breaking $3.70, I would be looking for some sort of retest of these lows, somewhere around $2.20 to $3. I'd be looking at somewhere around $3.20 to $3.25 to sort of be the to get tested. So somewhere around this range. There's 332, 323, somewhere in this range down at these lows. So somewhere down at these lows, I would expect the market to sort of push through and retest over the next, let's say, 1 to 3 weeks. That's sort of the expectation I would be looking at now that we've broken this sort of line in the sand between long and short right at the 618. So I hope that makes sense. Let's look at the crude oil. So crude oil has been really, really tricky. And, we had this breakout above $97 that we were talking about, and then we flushed all the way back down. I said that $100 to $101 a barrel would be the key resistance. We broke out above 97. We didn't even test 100. We came to like 99.12, and then we sold off. So we sold off all the way down to around $92.47, which was a pretty good clip down. I mean, that's, if you're trading the futures market, that's a really good clip down. So, but now you can see we're back up above $97. So I'm wondering if that was the flush out, and then we're going to come up and peg $100 or maybe $101 and then see if we can get through those levels. What's happening in crude oil right now is not really, I don't really think it's following any normal correlations with the other commodities or with the what the dollar index is doing. So I'm not really quite sure what's going on here, but it is, this is just something that we've been looking at for a long time, and it looks like, it sort of wants to follow through in terms of testing some of these levels. Maybe they're just, maybe they're just magnets. We've just been building up energy over time. You can see here we put in a lower high, put in a higher high, and we put in another lower high. So the question will be, can we break 99.12, set to put in another higher high, and even possibly retest these highs around $1.03, $1.04. So I'm still, let's call it cautiously, optimistically bullish on crude oil. But I recognize you can have these head rippers to the downside at any given time. So I think we're going to test $101 a barrel, maybe $103, and then we'll really have to see from there if we can get anything going to the high side. If this actual pattern sort of plays out, we could have targets as high as $110, $115 a barrel. But at this point in time, we're really in sideways mode. So I don't, I don't really see a lot of market energy here at this point in time unless we can break $1, let's say $1.04 cleanly. So we've looked at a lot of different markets here. Let's just look at the 30-year bond and maybe the 10-year note, and then we'll wrap things up. So, and get back to enjoying this beautiful weekend. So you can see here the 30-year broke this key support level at $1.39. And now it's just sort of building a base to the low side. Is it going to push back up to resistance and continue lower? That is really the key question. I don't think this area is actionable from in my opinion. We've got momentum pushing back to the high side in the slow stochastic. Fast stochastic is overdone. So I'd be looking at some sort of a push back to the high side and then looking if we can, find resistance again and continue lower. So those levels, you've got this sort of downtrend line coming in around there. And if you look at, there's a lot of confluence between this 21 EMA, this previous low, and this trend line. So I think this area here is going to be the major potential resistance level around $1.37 and 26.30 seconds, somewhere around that level. So if we push back up into that level, I may be looking to take a swing trade to the short side. Having said that, these markets are really, really tough to trade because there's a lot of intervention in these markets. So I'm not sure that I'm going to trade it. I'm definitely going to be watching it, but I really would like to get on the bonds on the short side. But I just haven't really pulled the trigger yet. So I'm giving it time to develop, and I'm constantly watching it and trying to determine where best to get in. So probably overthinking it. I've been told I do that a lot. But that's, it helps with the analysis end, but it doesn't help with the execution end. So let's take a look at the 10-year, and then we'll wrap this video up. So the 10-year here came down into this long-term trendline support. You can see it slip through it, but it's sort of finding resistance. I'd expect some sort of push back up to the high side, the same as the 30-year. I think these markets are pretty correlated. So a move back up into, we've got sort of the same chart scenario going on here, structural scenario. You've got the 21 EMA, you've got this downtrend line, and you've got this previous low here that we, when we broke it, we actually precipitated the downside out of. So that's sort of where the rubber met the road on this down move here, the break of this level, 128, 128.02-ish. So push back into that level to look for possible failure would make sense. So I hope that helps. I'm going to wrap up this video. This has gone longer than I've wanted it to, but I think, we've come a long way in the markets here. We're at some sort of key inflection points in some markets in terms of, it looks like the bonds are really going to go lower. Interest rates are going to go higher. The other markets are a little bit, the other markets are a little bit tougher to peg. They're sort of sideways, but they're putting in some market structure. So at this point in time, I'm just going to be really cautious, focusing a little bit more on day trading than swing trading, but also looking for swing trading opportunities, and trying to stay nimble and trying to stay recognize that the market can flip flop at any time here. It looks like, especially with the currencies, with the dollar index and the euro, we're getting a lot of flip flopping going on there. So I'm going to try and stay nimble, and just try and catch the few day mini swing trades, I like to call them, and on an intraday basis look for the major strength to trade on an intraday basis. So I hope that all makes sense. Happy Canada Day weekend again, and we'll look forward to seeing you I guess at a next video update. We're not going to be having any meetups or any CSTA Oakville meetings over the course of the summer. I may do an impromptu meetup. I'm not sure at this point in time. If we do, it'll just be a purely social meetup, but I may save that until September. So good trading, happy long weekend, and we'll look forward to seeing you soon. All the best.